Oh man, StreamYard was struggling there for a second. We live. Let's get to it, team. Still struggling here. This coughing won't go away. Won't be a long video today, but we got to share. We got to share what's going on. This is a moment we've all been waiting for. I've been telling you, I've been expecting. How many times have I drawn over here, that I'm expecting this big green candle to fire up and for us to see mortgage rates drop significantly in a quick period of time? How many months? I've been telling you that's going to happen one day. Last 3 weeks since we've had these channels in place, I've been telling you, and as recently as the last video we made on this, that this was going to come. Look at this humongous candle, 206 basis points, which is about, 300 basis points is about 1% in interest rate. So this is about let's call it 2/3 of a percent in interest, or in interest rate terms, 0.625, more than 0.5% in interest rate. So humongous day. Why? Let's talk about why, and let's talk about what, just quickly, because what we need to do besides thank the Lord is we need to make people aware of this. As this continues, and in my opinion, it's very likely that we'll see follow through on this. You're going to see rates drop very quickly. It takes a little while for these things to funnel through the market. A lot of people won't be in the know. Have to let people know is if you really want to take advantage of things like this, you have to do so relatively quickly. Now, lucky people who are in escrow today, I got to make several very fun phone calls today. Hey, guess what? Rates just dropped. You're already in escrow. You're going to get a lower rate. You're going to get a lower rate than what you got. Lock it in with a new bank. Those are great calls to make. Got to make multiple of those today. But why? What's happening? Okay. Inflation. Inflation is the problem. Inflation is the 800-pound gorilla. Why? Because at the end of the day, it's inflation that's causing the action of the Fed. And the action of the Fed has been to tighten. And tightening is not what the market wants. The market loves a loose Fed, not a tight Fed. We have a tight Fed right now. They're tight and they're justifying it because of inflation. So it's inflation is the monster for this market to take down. So any good news on that front would be great because we haven't had much. In fact, a lot of the inflation data hasn't been very good at all. Here's what we got today. So this is actual estimated previous. So previously on the monthly change, month over month, consumer price index was 0.4. The expectation was 0.6. So expectations in the market were actually that it was going to get worse. Well, it didn't. It stayed the same. So we got a month over month, no change. Not bad, right? Now look at the core CPI. Previously was 0.6. Expecting a little bit better, was a lot better. And the same thing happened with the CPI over the 12-month change. We were expecting it to get a little bit better, down to 7.9. Got even better than that. So we're having these upside surprises, this good news, if you will, on inflation. And that is creating a feeling in the marketplace that we are on the other side of this thing. And the more information we get that shows that and that says that, then the more apt the market's going to be to expect a pivot from the Fed, to expect things to just turn around, right? We've had a massive sell-off. Like if we go over here and we look at let's just look at this is the S&P 500, right? I mean, that's a lot of down, guys. This market's been pretty beaten up, and it's all started with a Fed raising rates. So a lot of stuff has been really beaten up. And at some point, that trade's going to change and it's going to reverse. It's going to go the other direction. The more information that we get that's positive on inflation, meaning that it's taming, the more likely that is going to be what happens next. So that's the reason for the run up in rates today. I'm not surprised. As you know, I've been telling you, I've been inspecting one of these big green candles for a long time. It's beautiful to see it. It's great. Rates now down. You've got, I quoted FHA rates in the 5s today, 5.75 for FHA, high 5s, around 6% for VA, low to mid 6s for conventional, which have been in the 7s. So a huge day, especially for people who maybe have an offer out, that's about to get accepted. You're going to get locked today or tomorrow. What a sweet deal for you. Sweet, sweet deal. Again, we're going to do some runs here. Actually, I need to make it louder. Sorry. Did that work? So that's what's going on. So obviously we still have some election things going on. The market's kind of over that. Doesn't really seem to be pending too much on that, as we had, kind of a crazy day on Tuesday. But overall, right now, all that's been recovered and then some. There's been some wild stuff going on in the crypto market. Crypto stuff today is up huge. You have Ethereum is up 20% today. Bitcoin is up 12% today. They're both down over 10% the last couple of days, though. It's not like they've made up all that ground. Don't get me wrong, but you're seeing a lot of optimism sort of flood into the marketplace today. You kind of look at it and go, well, what is the reason for that? It's the inflation data and the possibility that we could be on the other side of this thing. And that really is what's going to move the market. So my prediction is this, and I'll leave you with this. My voice is not loving this, me talking right now. Is that expect these things to take place in the following months. Now, the holidays can always throw a little bit of a wrench in things, but I believe over the next 3 to 6 months, we're going to see rates drop significantly. You're going to see a lot of pent-up demand. A lot of people who were just like, I wouldn't touch that market with a 10-foot pole, but who've wanted to buy a house for the last few years. It was too crazy, and then it got too scary, and they stayed on the sidelines. A whole lot of people in that camp, they pushed themselves to the right on the timeline. There's big pent-up demand there. I'm seeing a lot more activity in the marketplace. Expect things to get a little wild, I think, in the early part of next year. A little wild. What do I mean by that? Lower rates, more competition. Maybe we'll get some sellers back into the game. Some sellers who said, you know what, I'm not going to sell it if that's what it's going for. I won't sell it. Seen that in a lot of places all over the country. I'm looking at real estate everywhere, and you see a lot of places where just sellers just off the market. Nothing there. It's just nothing. Nobody wants to sell for these prices. Everyone believes that the homes are worth more. They're not going to fire sale their homes. People understand that's one thing that we've discounted. A lot of people, especially the real estate bears out there, people accuse me of being bullish because it somehow gets me business or something. Exact opposite. So many people I know who are bearish, people who would have normally referred me someone, they won't because they think I'm too bullish, whatever. Let me tell you, the one thing that bearish people on real estate didn't think about was that the crash that we've been through in the past, as scary as that was, it also taught people something. It taught people that real estate will come back. Even in a horrible, horrible situation, it will come back. So a lot of these sellers are like, no, I'm not going to sell now. We'll just hunker down for 5 years if we have to. Let it pass. So there's the underlying wisdom that has been gained. We've forgotten about that. If you only focused on the fear, if you only focused on the thought that, oh, well, this is pain is coming, people are going to push the eject button, that's what people do. Could things get worse? Of course, they always can. Is that what it looks like? Nope. Hey, good point. Good point. Bear market rally. Is this a bear market rally? We're definitely in a bear market. 100%. We are in a bear market, so you have to call it a bear market rally. There's nothing else that you can call it, but we have a significant spot here. Let me show you this on the S&P. So this is a recent cycle high, cycle low, Fibonacci. The 50% retracement right here, which we've rejected this 1, 2, 3, 4 times. Today, we gapped up and just knifed through it. So is it still bear market? Yeah, absolutely. We can come back up here to, this bearish horn that we have going. It's a macro bearish horn on the S&P. 100%. You come back up here to this and reject still. That could totally happen. And we could see further lows. That's all totally possible. Totally possible. But in the meantime, if something fundamentally is changing and we can see that, we know what the market's reacting to. I mean, look at this data drop, okay? So this data drop here, all this inflation data, and including the jobless claims data, all that stuff came out at 8:30 a.m., okay, Eastern time. So let's just do for fun. Let's just take this guy and let's look at the 5-minute chart on the S&P. Let's have some fun, okay? Oh, wait a minute. No, we're not going to be able to see it on this. We got to look on the futures. Okay, here we go. Look at the futures. Look at this huge green candle. When did that come? 5:30 a.m. So the market 100% was not expecting the data to be this good. So we do have to look at that and go, yeah, you could say it's a bear market rally, but there's good reason behind it. It's not just a dead cat bounce. It's not just, okay, well, there's so many people selling that, when there's too many sellers, of course, it can only go one direction, higher, right? You need people think, well, if you get overwhelmed with sellers, yeah, but if sellers are all selling at a certain level, then you have a situation where there's those stops, their exits become the next ratchet higher. And that's what happens a lot of times when in a bear market rally, just shorts pile all in, everyone's short, then all of a sudden it's like, okay, there's no one left to sell, buyers come in. That's all there is. And then they start hit stops and it runs higher. So here, this is actually just pure, that's just pure buying right there. Now it could be short covering, of course, but it's just massive buying, pre-market too. That's pre-market. Market didn't open until right here. So everything from here to here, that's all pre-market. Pretty wild. And then of course we ran higher the rest of the day. It's just an up only day. That's what it was. But my point is that it's not just like a algomania. Is it the algorithms, hey, that are pushing the buy button on this? 100%. Computers are trading the stock market a lot more than human beings are. There's no question about that. But at the end of the day, there's reason for it. This data coming in better than expected, going to move the market higher. Would I be surprised if we go lower tomorrow? Definitely not. Market can always go up or down. Remember that. All I'm saying is, when you see this kind of action, this is exactly what we've been expecting, exactly what I've been telling you, this will happen one day. Today is the day. It has happened. Could this be a false breakout? Of course that's possible. It sure doesn't look like it though. Look at what got knifed through today. Can we break this down real quick? Okay, we leapfrogged. So we gapped above the 25-day moving average. We absolutely gutted the 50-day here. Absolutely gutted R2. And then at the end of the day, at the very end of the day, so much strength at the end of the day after all this buying, got through the Fibonacci level too. Closed above all of it. Guys, in my wildest dreams, I would not have been able to tell you that this is what it would be in one day. In my wildest dreams. But I have explained many times, when the inflation data starts to look a little bit better, you're going to see rates will drop, and they'll drop fast. And that's exactly what's happening. All right. I can't talk anymore. I'm going to end up coughing my head off. Long story short, if you're bearish, you have to start asking yourself this question right now. You've told people not to buy homes. Okay, genius. So when do you tell them that they should? You're going to have to really start thinking about that. Otherwise, people are going to look at you 2 years from now and go, hey, you told us not to buy when it was like right before the best time to buy. You will have to figure that out. I'll shoot you straight. You know what's up. I'm here if you need me. Rates are down. Coming through, baby. And the market is just starting to heat up again. Now we're heading to the holidays. So I'm not expecting real fireworks until next year. I'm not. But this isn't going to be some weak-ass holiday season for real estate. I promise you that. People will be pulling the trigger. I wondered if it would keep playing the music or not. All right. So that's it for me. You guys have a great night. I'll see you soon.